Hey fools, and welcome to another Motley Fool video, and a little bit of a special one this time because this is the first in a three-part series of two stocks that can really help boost your retirement portfolio. I am joined today by the one and only Jill Ralph. Hey Jill.
Hi Chris, how are you?
And yeah, very well, thank you. And Jill's basically going to talk us through what really is your best your best strategy if you've got more than 10 years going to retirement. So Jill, why do you like dividends, or why does everyone like dividends really?
So it's pretty straightforward. They are essentially paying you real returns, real money, just for owning the shares. It's hard to argue with that, right?
What's not to like?
They also offer a little peace of mind because if you own a reliable, consistent dividend payer, regardless of what the market does, regardless of what that company's share price is doing, you still know you're going to get those quarterly or semi-annual dividend checks, which is just great peace of mind.
Absolutely. So there's a serious benefit for you, but as with everything in investing, where do the risks lie?
There are three key things to look out for when you are investing in a dividend company, a potential dividend company. First is you don't want to chase high yield. I think that's a very quick way to get burned. And I think people get lost when they see that big yield payout dividend number there. You want to look underneath the hood of that stock. Second, bad track record. If a company has historically been cutting or even just doing away completely with its dividend, it's not a good sign.
No.
And then, the third is, again, looking under the hood. You want to look at the balance sheet. If the company cannot afford to pay its dividend, if times get tough, what's going to be the first thing to go? The dividend. So you want that security, and those are some warning signs to look out for before you invest in a company. Okay,
now on to the big reveal, I guess. So if you do have over 10 years to go till you retire, what's your first stock that you think will be great for that portfolio?
Well, first thing, congrats. If you are investing now and you have more than 10 years until you retire, that's great. There is no time that's too late to start, but the longer your runway, the more chance of success. So when you're investing younger and you have a longer timeline, you can afford to go after more growth, which means typically a lower yielding dividend paying stock, but you're getting a little more upside because there's some more growth potential. When I think about companies that may fit this bill, I think about a stock I personally love, Burberry. Luxury retailer here in the UK. Yeah. It does actually pay 2%. So you get a 2% yield from that stock, but you're also getting that company, which is a performer. It keeps delivering here in the UK, but also trying to grow its business in China, outside of the UK. So there's upside there.
Absolutely. So that's number one. So that's Burberry. That's ticker BRBY. Jill, give us number two.
Second one, for our food lovers out there, Domino's Pizza, ticker DOM. Again, it's a growth company. It's really going out. It thinks it's got some business to keep growing here in the UK, but it's really going after expansion in Europe as well. Also pays about 2.6%, yield.
Pretty fantastic. So there you go, guys. There's your first two. We'll be joined in part two where we talk about if you've got a little less than 10 years onto retirement. But in the meantime, thank you very much for joining us.